Okay, brother, today Nasdaq reached all-time highs. Okay, today history is being written. So it's a pleasant moment for you to witness this historical moment. Okay, now I'm messing a little bit, but basically, who am I? So, as you know, brother, my name is Yasha, and I document my trading journey on this very YouTube channel that you are watching right now. Okay. Good. Okay, what a beautiful day. Good. So this is the chart, and this is the trade that I did today in the basically in the New York market open session. Okay, it was a nice 2-to-1 risk reward ratio, but I have to disappoint you. It was a paper trade because today I wasn't trading because I had something else to do. But basically, this was the trade that I would have taken. Okay, now let's delete this, let's delete this, let's keep this, and let's go together through the price action a little bit so that you can have better understanding how to behave in a situations when you have all-time highs. Okay, this is my second time, sorry, it's my second time trading all-time highs. The first time was during October 2025, and now it's the second time. Okay, so basically over here we have somewhere midnight, okay, where it's 18. Over here it's 6 o'clock in the afternoon, and over here I predicted that the market will go higher and push through previous all-time highs, which were somewhere in this range, okay. And then we had London session open. Over here I didn't trade, I was just observing, but I correctly predicted this little move downwards. Okay, so I correctly predicted, I did a paper trade because as I told you I didn't have time to trade. I predicted this little move down, okay, like this. So that was the correct prediction. And then at the New York market open I was online, but I didn't trade because I had something else. So basically we can go together to the price action, and I'm gonna show you what you could have done. Okay, so over here we have a bearish fair value gap on the 15 minutes time frame. Here we have another one. Then what do we have over here? We have one particular swing high, and then over here we have one particular swing low, and over here we have fair value gaps. Okay, so let's go together now to 3-minute graph. And what do you see is going on over here? What do you see? The price opens, okay, it goes higher and then tanks, and it's tanking and tanking and tanking and dumping into absolute shit. Okay, and then what happens over here? Take a look. Over here we have break of structure. Nah, first of all, what do we have? First of all, over here we have a massive liquidity sweep. Okay, this is a liquidity sweep, and at the same time we touched this 15 minutes fair value gap. Okay, so let me delete this, let me delete that. We touched 15 minutes fair value gap, and additionally, do we touch 0.5 on equilibrium? I haven't measured that. Yes, we do. You see, we also touch 0.5 on equilibrium, so everything has mathematically been calculated. Okay, we touch 0.5 on equilibrium, and then we have liquidity sweep, and here with this blue line you can see over here we have break of structure. Okay, but then what do we have additionally? Additionally, we have over here one inverse fair value gap, as well as this one over here. Okay, we have all of those fair value gaps. Now over here, pay attention. No, sorry, we don't have inversed yet, but we have a bearish fair value gap. Okay, and we have additional one over here. Okay, like that. So what happens? The price here, we break structure to the upside. Okay, we have this massive movement up, and we at the same time we inversed this particular bullish fair value gap, as you can see. Okay, we inverse that one, we go lower, and then we start exploding higher and higher and higher. Okay, why? Because over here we touched 0.5 on equilibrium, and at the same time we have a bullish fair value gap over here. Okay, so what you could have done, for example, you could put your enter over here on the middle point of that equilibrium, sorry, on the fair value gap, the bullish one, and you could enter, okay, like this, and that would have been your trade. Okay, now why is this trade over here high probable? Because we have bearish inverse fair value gap, which became a bullish one, and at the same time we have a normal bullish fair value gap. So this little like this little space where those two fair value gaps overlap is extremely high probability trade. Okay, because I mean a zone. Why? Because over here everything is balanced. Okay, so if I delete this and I use only this one, this little move like that, okay, this little zone would be a balanced price, so it's a high probability setup for a trade. Okay, but I wanted to have extra confirmation and I wanted to wait until we start to go higher and higher and higher, until we inverse this fair value gap over here and this one as well. Okay, so once we inversed this fair value gap over here, the small one, I entered more or less over here. I put my stop loss here. Okay, and then once we inversed this fair value gap over here, this 3-minute bearish fair value gap, I moved my stop loss to break even. Okay, and I targeted more or less this 15 minutes swing high that is also at the beginning of this bearish fair value gap. Okay, so I targeted this one and it got hit. Then I targeted this one and this one also got hit, so that was previous all-time high. So once that happened, I moved my stop loss more or less over here to the middle of this movement. Okay, and then I was just trailing the trade. Right now it's already 3 risk reward ratio, so what I could do right now is move stop loss over here, and then we are now entering into a lunchtime. Okay, this gray line represents the lunchtime, which goes on until 1:30, and then we see what happens. Okay, but this is basically the trade. Okay, this is what I did. It was high probability, it was amazing trade, amazing price action analysis from my side. I'm really proud of myself, to be honest. And yeah, I hope you learned something new. I know that I'm talking way too fast, but I need to keep your brain engaged, because otherwise, due to your lack of attention span, you just click off out of the video. Okay, so since I'm a nice guy, I'm gonna recap everything again. Okay, so where do we have important levels? We are on 3-minute chart. We go lower, 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 lower. Okay, then what do we do over here? We touched 15 minutes fair value gap, which is represented by this rectangle over here. Then what do we have? We have break of structure over here with this blue line. Okay, at the same time we created this bullish fair value gap, and at the same time we also have over here this bearish fair value gap, which gets inversed. Okay, good. And since those two fair value gaps were overlapping each other over here, this is a high probability entry. But if you want to be extra sure, then you can do what I did. I waited for this upper bearish fair value gap to be inversed, okay, with this candle over here, and this is where I entered. Okay, and then I targeted previous day high, and I basically let the trade run also higher and higher and higher. Okay, that's it, bro. It's that fucking simple. It's that simple. Today it was very clean price action, and let's see what tomorrow brings. Okay, tomorrow I doubt that I will trade because I have to do some things, but I'm still gonna log in. I'm gonna check the market. Sorry, and yeah, that's it. Okay, Now, at this point, I also invite you to join my Discord server. It's in the description. It's completely for free. I'm not selling anything. Over here, we have basically daily bias analysis. We have trade breakdowns, no trade today. And then you can also post your own trades over here. We also have self-improvement content, okay? Because our mission is to become better traders and stronger men, basically getting rich with trading and getting better with self-improvement, okay? So since you watched until this point, you obviously support that movement. So subscribe to the channel. Thank you for supporting me. Do the hard work, brother, and see you on top of the world.